Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. LME 3-month copper. An indecisive doji cross yesterday after the previous session's bullish white soldiers and follow-on high from the recent bullish harami. The key recent feature is still the break below at the start of last week under the lower bull channel line, currently at 82.15, of the broken bull channel, which is currently between 82.15 and 93.08, and it's highlighted in dark blue on my daily chart. The move below early last week looked as if it might have had some legs on it until it reached the same support seen back in late November last year in the 78.50 to 78.60 area, where it turned back up. The question now is whether the market will react the way it did back then and move up to the 85.50 area, because if it did, then the broken bull channel would have repaired itself, at least to some degree. Thus, it all depends now on what happens at this broken lower bull channel line. Above that, we have resistance in various strata, most notably at the flatlining long moving average, currently 83.75. Now, so far today, shyness at testing higher by this market, with the market dipping, though not as far as the lesser Fibonacci line at 80.16. We may be trying for a bull hammer or hanging man pattern, neither of which would be ideal just yet. LME 3-month aluminium. A somewhat reactionary bearish harami and possible hanging man pattern yesterday. Now, in the bigger picture, we have a number of things going on all at the same time. There is the big November 2022 to May 23 head and shoulders top, which initially looked like a possible continuation pattern, but has seemingly turned into a topping pattern. This is a primary target X down in the 2058 zone, and with a harder, much harder to reach target X1 down in the 1858 zone. Next are the two possible descending triangles and their relevant targets below. The first and larger one is from the late February to May action. This utilizes neckline of the same big head and shoulders top, which is colored in purple, as its base, currently at 22.69, and the late February to date downtrend, also colored in purple higher up, currently at 24.47, to give a primary target X2 below in the 21.78 zone, and a secondary target X3 down in the 20.88 zone. Finally, there is the smaller optimized descending triangle highlighted in dark blue on my daily chart, made up from the small late March, early May head and shoulders top neckline, currently at 22.94, and the optimized late February to date downtrend, currently at 23.97, which is entwined with the declining medium moving average, also currently 23.97. This had a primary target in the 22.33 zone, a target that's already been achieved, and a hard to reach secondary target X4 down in the 21.74 zone. Finally, there is the late February to late April bearish Andrews pitchfork. It's a new pitchfork, but one that seems to be showing the bearish angle of attack quite well so far, with prices following the middle time, currently at 21.99 lower. This pitchfork is highlighted in bright red on my daily chart. Now, so far today, a slightly lower open and a move down to the middle time below, where prices have bounced back up just over yesterday's high before pulling back. Right now, it's looking like an indecisive spinning top today, if a large one. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.